Insurance agents from around the world, welcome to the Insurance Guys podcast. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama, parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
I've got a lot going on,
Dude.
but I'm good.
Dude, I'm telling you, you got this place stepping and fetching over here at Portal Insurance. So every desk is full, got a body in the seat.
Yep.
Got the new addition on the other side about to get going.
That's what I've got going on this week. So the space where we're at, to paint the picture for the listeners, we're on one half of the bottom floor
of a pretty damn big building.
Yeah. And then the option came available to take the other half of the building over. The gym that was over there moved out. And it had always kind of been in the back of my head because that side over there is a lot prettier.
Mm-hmm. Yeah.
Even though it was a gym, has a nice lobby, upstairs office.
Right.
And I always kind of in the back of my head, like, man, I'd love to take that over too because I love being here. I love this building. And the gym moved out, and it's actually a good like negotiating lesson. So the apartment management company, I told them I was interested in it, and they threw this high ass rent at me.
Mm-hmm.
And I knew two things going into that. One is I knew what the other person was paying.
Mm-hmm.
And she had just renewed her lease. She was breaking it. So it wasn't like it was 3 years ago rent. You know what I'm saying? This was current, right? And then I also didn't need it.
Right.
I could have used it, but I did not need it.
Mm-hmm.
And there's no better negotiating position to be in than, hey, I want this, but I don't need it. And it's
Correct.
like I remember I had an insurance agent call me one time who had a potential acquisition that he was going to buy, right? And I've given this advice probably to 30 insurance agents. So if you're listening to this, it doesn't mean it's you. But I said, look, the number one piece of advice is do not get emotionally attached. When emotions get involved, you make poor decisions.
Right.
You make emotional decisions. You have to look at everything you do as an investment. And, if I go online today and buy Tesla stock, like there's no emotion involved in that whatsoever.
Mm-hmm.
It's just a pragmatic decision. And this one particular person called me back the next day and said, man, I'm sad. The deal fell through. And I'm like, I told you. He said, I know, you told me not to get emotional. So anyway, the apartment threw this high rent at me. And I get on.
And you were struggling with this because I remember you called me one day and you were talking about like,
yeah,
dude, I don't think this is going to happen.
Yeah. And we are at capacity in our current space.
Correct.
Like when everybody's not here today.
Mm-hmm.
When everybody's here, like we
It's
did
packed.
we had everybody here 2 Fridays ago.
Mm-hmm.
It's, I've got the new guy, Sean, that you met out there, is sitting at basically a kitchen table.
Mm-hmm.
And so we needed the new space. We don't need the space we have now. Right now that this has gone through, we're at 6,000 square feet.
Right.
We don't need that much space, but we didn't need this space when we moved in. We grew, I'm planning for future growth.
Sure.
And I could have bought something, but I could really only afford to buy what we need now. And so
Right.
then 2 years, you're in a worse spot. Now you own something that doesn't work for you. And so I get on the call with this big wig out of Jacksonville for the company that owns this building. And this is a modern space. Everywhere else in the country, modern spaces go really, really quick. Not in Mobile, Alabama. In Mobile, Alabama, people want traditional chair rails, wood grain, financial advisor office.
Right.
And so I get on, and this guy's assuming that it's going to go fast. If they don't rent it to me, they'll rent it to somebody else. it's another negotiating lesson is come with data. You know, if you're going to buy a car, come with data.
Mm-hmm.
If you're negotiating to buy an agency, come with data. Like I tell agency owners, when you're looking at buying an agency, most banks will finance up to 70% of 5.5 times EBITDA. Use that in negotiating.
Mm-hmm.
Tell the seller, hey, the most any bank will finance on this, not just me, for anybody, is 70% of 5.5 times EBITDA. You're asking for 7 times EBITDA. You're not going to be able to sell this to anybody and get what you're asking up for. You know what I mean? Like
Sure.
the more data. And so I
Same
get on
for selling an agency. You want to have a lot.
100%.
I was talking to an agent the other day about us using Kerry Wallace as our fractional CFO. And I said, you know, I shouldn't say I don't love. It doesn't turn my crank to go, oh, wow, I get to get on the phone with Kerry or a Zoom call and talk about, you know, this month's financials. That doesn't really turn my crank. But you know what does turn my crank? If we ever do decide to sell this agency, we will have 4, 5, 6, 7 years of financials. And that means a lot to the Hubs and the Marshes and the. And
they're going to pay more for that.
Well, yeah, they're going to say, well,
at
least these sons of bitches have got their financials in order.
Even me, when I look at buying one and I see that, you know, agency build premium is counted as revenue, for example, right?
Mm-hmm.
Well, that's an indication that you don't know what you're doing.
Mm-hmm.
And yeah, I can fix that. But what else do you not know that
Correct.
you're doing? You know what I mean? And so I get on the call with this guy. And I'm like, I'm coming to this call with data. And so I gave him a lot of data. And I said, hey, did you know that the space that I'm in right now, see, they didn't own the building when I rented it originally.
Mm-hmm.
Do you know that the space that I'm in now sat vacant for 2 years? And I could see his wheels turning because my current space is actually much nicer
Mm-hmm.
and is already built out as an office. That space over there is raw space.
Right.
And so all of a sudden I've got all the, and also I added on, hey, by the way, like I don't need this space.
Mm-hmm.
Like if you guys don't want, and I said all this nice, but like if you guys don't want to give me, like, here's what I need it at. If you guys don't want to give it to me for what I'm asking, like I just won't rent it. I'm good.
Mm-hmm.
And he's thinking in his head, okay, this space that's built out, this much nicer, sat vacant for 2 years, this one. And then about that time I threw on, and that space is raw space. So I threw out what he's thinking. Unless you get another gym to go in there, the new person is going to have to build it out.
Mm-hmm.
They are going to ask for tenant improvements.
Sure.
And I also know you guys own this other commercial space down here that you guys struggle to rent, so it's going to be a worse problem here.
Mm-hmm.
Well, we're just looking at market rents. Yeah, where are you looking at? I'm looking on St. Louis Street, St. Francis. I mean, yeah, that's down. That does. This is not that. And so I hit him with all this data, and I eventually got the original number that I wanted was $10 a square foot, which is, from my understanding, I don't know commercial that well, a great rate anywhere in the country for not Class A office space, but pretty close.
Sure.
And then I said, okay, now let's talk about tenant improvements, because the next person you rent it to is going to ask for that too.
Right.
And they ended up getting $20,000 of tenant improvements, which is the exact amount of construction I'm going to do.
Mm-hmm.
And
but in exchange for all that, lease had to be longer.
See, I wanted a longer lease.
So what did
They
5
wanted?
years?
They
10 years?
wanted. They wanted a shorter lease. I wanted a longer lease because cash flow is much more important to me. I'm not going anywhere.
Mm-hmm.
You know, we have the most stable business.
Right.
Not us, but the insurance world.
Right.
You know, I'm not going anywhere. My financials are very predictable. You can do a bad job in insurance, you're going to keep 75, 80% of your customers. So they actually wanted a shorter lease because they're getting ready to sell the building. So they needed so we had the exact opposite problem. I was more worried about cash flow. They want to show, you know.
Sure.
And so so then he told me that piece of information, which I knew that, and I said, okay, well, the tenant improvements, if you're trying to show cash flow, normally tenant improvements are done in the form of a rent abatement. So I just don't have to pay rent. So the $20,000, I just wouldn't have to pay rent for 4 months. He's like, yeah. I was like, well, why don't you just cut me a check for $20,000? That way your rent's just, because in commercial real estate, the value of your building is not based on comps. It's based on how much you've increased the rents and what the rents are.
And they haven't owned this building for very long,
Like
have
3
they?
years.
So they're getting ready to flip it and try to make a profit on it.
So they wrote me a check for $20,000. So I came out like feeling like an expert negotiator, which I am not. But yeah. So like,
are the tenants upstairs? Do they own their condos, or is it rent? It's like an apartment rent.
It's all rentals.
Okay,
yeah,
okay.
Yeah, and it's what these guys do, and this ties into insurance a little bit. Commercial real estate right now. Like my wife and I buy real estate. I look at real estate in my spare time. I've always wanted to own multifamily. That's what I've wanted to do. And right now, man, where interest rates are and where prices are, it's very, very hard to buy any multifamily that's in a good area.
Correct.
And get the cash flow. Like this building, when you look at what they paid for it, does not cash flow. So it only makes sense. So what it was is it's a 1031 exchange. So for those of you who don't know, if you own commercial real estate, you sell it at a profit. If you roll that profit into a new unit,
and you've only got like 60 days to do that, something like that.
If you roll it into a new deal, you don't have to pay taxes on it. So you're just kicking the taxes down the road, basically. And so what a lot of these folks do is they end up overpaying for stuff in order to do that.
Right.
They slowly increase the rents, increases the value, they sell it, and they do it again. So that's the game.
So is the play to find an area that's a growing, up and coming area and buy raw land and build an apartment on it?
We've looked at that. Laurel and I were very close a couple years ago to building a fourplex in Saraland. The problem with that though is you're talking 12 to 18 months construction time, and then probably another 12-month lease up. And then by the time you lease it up, some of the original tenants are moving. You know what I mean? So that's difficult too. I think the name of the game for me, and I'm an amateur, is you just keep looking at deals until you find something that you can make work that you're comfortable with. The flip side of that is you can buy in an area that is not as good of a growing area, but then you're not going to get the appreciation.
Correct.
So it's like everything's kind of a trade-off. Like me, I would rather have okay cash flow but get the appreciation than have good cash flow and not get the appreciation, because the other thing with no appreciation is it's going to be harder to sell. You know what I mean?
Yeah.
So like our beach house, our Airbnb, we're probably going to net $20,000 this year projected. We've already broken even on it for the year. So basically anything from August on is going to be profit, assuming nothing goes wrong maintenance wise, which shouldn't because it's a new house. And so the cash on cash return on that with what we put down is not great. However, Gulf Shores, Alabama, you're going to get the appreciation. So it's like if it breaks even, makes a little bit of money, we have a place to stay when we want to, but you make several $100,000 when you sell it, that's okay. You know what I mean?
It feels like everything is going the way of the local independent insurance agency that sells out to the behemoth Higginbotham, Marsh, Hub. There's about 10 others.
Yeah.
You can't buy a damn storage place anymore because the monster big venture capitalists behind the money companies are going in and swallowing all those up.
Well, that's the
you
problem.
Can't buy a local independent insurance agency because what are you going to do? Go in and compete with freaking Hub, Marsh?
Yeah, exactly.
What is this new Tricura or whatever?
That's PCF. They rebranded.
Yeah, they rebranded it to Concordia. Yeah,
yeah. That's the problem we're running into with acquisition. So we bought Coastal Alabama Insurance, and then we bought LTN. Coastal Alabama was a little more than double the size of LTN. They were both equally hard. Okay, when you buy an agency,
That's super simple, isn't it?
typically, no matter the size, they are going to be equally as hard. Okay,
Equally as hard to get closed out.
just
get to the
after
closing line.
after the fact, just getting everything lined out,
Yeah.
the processes, the customers. We had a customer that called us. A customer called last week that found out about the LTN acquisition, which closed a year ago,
Mhm.
and was like, "Well, I don't know you guys, but I'm going to give you guys a year test trial to see how this goes."
There you go.
And I said, "Please don't tell me you told him he'd already been with us a year."
Right.
Like, so they're equally as hard. And so like Coastal, we bought Coastal, we noticed the impact on the bottom line immediately.
Mm.
We were in a different ball game.
Right.
It was great. Okay.
And let me ask you this: that noticing that immediately, you went from from 12, 13 million to 18 million.
Yeah.
What was that?
Yeah.
Okay.
We basically doubled overnight.
Okay.
So that was like, I kind of saw okay, this is fantastic, right?
Mm-hmm.
My agency valuation, Carrie does a valuation every quarter. The difference from December of that year, a month before, to April was substantial. We kind of saw the benefit of doing acquisitions. Well, then when we bought LTN, we were bigger, and it wasn't as big as Coastal. This isn't an arrogant statement. Like, I didn't notice the difference on the bottom line.
Mm-hmm.
There was a difference. I didn't notice it, right?
Mm-hmm.
And so then that gets me in the mindset, and with both of them being equally as hard, and I'm proving your point here, with both of them being equally as hard, hey, it's only worth it if you can notice an impact,
Mm-hmm.
right? Well, now the problem is, given where we are size-wise, for us to do an acquisition that we notice it on the bottom line,
Mm-hmm.
and it's worth it, now we're competing with those guys.
Right.
So that's where it gets tricky. And again, I said on a previous episode, I'm not buying right now.
And they've got the horsepower.
Correct. Yeah, you're not going to like how you compete with them. Here's how you compete with them. I'll tell you how you compete with them. It's the same way you compete with them on an insurance account. So Chris May, before we bought his agency, called me one time. He was working on a HAB account, and he was going against Higginbotham.
Mm-hmm.
And he's like, "How would you approach this?" I said, "Well, you need to use the diss they're going to use to the customer is that you're small.
Mm-hmm.
You need to use that to your advantage.
Mm-hmm.
And here's how you do it. You say, look, Mr. Client, okay, I have all the same markets they do."
Mm-hmm.
And he did.
Mm-hmm.
All right. You are going to be their 3,000th largest client.
Right.
You're going to be my number 2.
Mm-hmm.
Who do you think is going to pay better attention to?
Mm-hmm. Mm-hmm.
And the client bought the business from him.
Yep.
You do the same thing in acquisitions. Look, you're going to be their 300th acquisition this year.
Mm-hmm.
You're going to be my 3rd.
Mm-hmm.
Who do you think is going to take better care of your people and your customers?
Right.
Now, the caveat to that is when the delta is $6 million,
Right.
they're going to take the $6 million. So
Sure.
it's tricky, right?
Sure.
I think the play is, I've thought about this a lot. I think the play is, in order for it to be worth it and make the impact, I think the play is you have a bunch of deals going at one time and you buy a bunch of small agencies.
Yeah.
I think that's the play.
What's
But-
small to you now? A couple $1 million in premium?
Yeah.
Yeah.
I mean, if it's less than $1 million, if it's less than $2 million, unless it's just a slam dunk good deal, or I'm flush with cash and can pay cash, it's almost not worth it.
But if
I turned one down. I turned one down in Georgia that was $300K in revenue. The guy owned a restaurant. He was selling the insurance agency to run a restaurant. If you could imagine that, anyway. And the dude was going to owner finance it for me based on renewals. So if something didn't renew, we didn't have to pay. It was a slam dunk all
Why'd
the
you
way
turn
around.
it down?
I was just like, I don't know if it's worth the headache right now. And that was like a year ago.
But you're at a place financially now. If you found an agency that was, let's say, $700,000 or $1 million in revenue, you could get that deal done in a hurry now, couldn't you?
We could get it done pretty quick. Yeah. The thing about financing a man is like if you have to go through a bank, if it's an insurance bank, like the process is like easier than buying a car.
Really?
Like they can get the financial side done very quickly. What drags it out is the due diligence, which is all on you, and the negotiating. You know what I mean? That's what drags it out. But we've got a checklist. We've got an acquisition checklist. It's like 30 or 45 points long. Things we do before, during, and after the close. If anybody's listening to this and wants it, just reach out. I can send it to you. So like mainly Kenneth, like we've got it kind of down to a science, but based on what we talked about the other day, like I'm not buying right now. Like rates are as high as they're ever going to be. They're coming down. It's the equivalent of buying a stock at its absolute peak.
And when you say rates, you're talking insurance rates.
Yeah. Now interest rates are hopefully coming down. We can refinance some stuff, and
So what's your ultimate goal now? Because you got to have a new North Star now that you guys are above 20 million in premium.
My goal currently, and I've had to answer this my goal is to get as big as I can, as responsibly as I can. It'd be very easy to go get a line of credit and hire 1,000 sales reps. Like you do that, you're going to grow. Right, you hire.
I remember you told me to do that one time. You said you
just
need to go hire 1,000 reps, and I said, Bradley, I can't.
Yeah, it is. You hire 1,000 people, you're going to grow, but at what cost?
Right.
You pay your producers 90 new, 90 renewal. You're going to grow, but at what cost? Right. Like, so my goal has always been to like have that balance of responsible, but also pedal to the metal. And I have no intention of selling. I have no intention of going anywhere. Like our goal is just to get as big as we can, as responsibly as we can. What am I focusing on right now? I'm focusing on new business. We're focusing on ramping up our sales processes, shortening our sales process. You walked in this morning. We were role playing with the sales team.
Wow.
We got a new script, which I'd love to have you look at because you're good at that kind of stuff. That I had them role play in that. I followed the Alex Hormozy process of role playing, which is you get two people to role play, and then you don't let them finish the script to tell them what they did wrong. You stop them real time, and you say, nope, say it that way. Do it again. And you keep doing that until they get it right, and then they do it 3 more times. And so we're focusing a lot on that for a couple of reasons. One, insurance rates are going down. There's an opportunity to pick up a lot of business. 2, we had gotten a little bit sloppy in that our new business has always been great. It's a product that people always have to buy. Therefore, you're going to sell business. But we really didn't have a process. We got processes for everything. We really didn't have a tried and true sales process. Everybody was just kind of doing their own thing. And so we're shoring a lot of that up. And the other reason why, aside from rates going down, there being a lot of opportunity to grab business is, we've consistently done, a good month for us is a good normal month for us is like $500K in new business. A bad month would be $250 to $300, and a great month would be like $1 million, right? We've been in that range. Remember when you and me had that sales contest? That was 4 years ago. I was like, hey, we're going to do 350. Right. Like you got to beat 350, and you did. And so here's what's happened.
We can't compete with y'all now.
Here's what's happened though. Here's what's happened. Now the agency's bigger, right? There comes a certain point in your agency where it's really hard to maintain above 91 retention.
Yep.
Well, if you're losing $4 million a year,
brother, who you talking to?
And you're only writing $4 million.
Correct.
And so we had gotten into there's a saying that people don't people fall to the level of their training. I think people fall to the level of their comfortability. And we got really comfortable in that 300 to 500,000 range, and we can do so much more based on our lead flow. We can do so much more. And the solution to the problem, I think, is sales process and hold people accountable. And it's kind of like, I had a buddy that I used to play golf with that was like 10 years younger than me, and he was a real good young golfer, and he would shoot around par, right? Well, he would start a round of golf, and let's say he's like 3 under through 5, he would almost self-sabotage and get back down to even par. Okay, I'm comfortable here. And so we kind of got in that level of, hey, we're comfortable here. And it's like, no, we can do way more. You know, like I went to Billy Wagner's office. Billy Wagner's team does $1 million a month in new business. He and I have the exact same lead flow, exact same market. His closing ratio is just higher, and it's higher because of the process. So that's what we're focusing on right now, is like really getting our sales like humming. So,
and when you say sales process, you're talking about from the moment the phone call is either inbound or outbound to talk to a lead, what is said, how it's said to close new
all
business.
the way through close. Yeah.
And then also buttoning up your renewal process, because you just said it. That's been our problem in my agency for the past 3 years is we write X number of dollars in new business in a month, and we have that exact same amount go out the back door.
Yep.
And so that's the more that you can shore up on the back end, the more you're going to grow.
Yeah.
Overall.
Absolutely. You know? It's both sides. It's not one or the other. And we got really, really good at retention over the last few years because of the acquisitions. That's the name of the game. You know, but if your new business is only replacing what you lost, and we were still growing, but we were growing by like 200,000 in premium a month, 100,000. Well, it's really hard. You know, like I see these guys, and I used to be one of these guys, so I don't fault them, but I see these guys in IOA and Insurance Soup like, we grew our agency by 83% this year. And I look, and they've been in business a year and a half. I'm like, yeah, it's really damn easy to grow your business when you're small. Right. The bigger you get, the harder it is to grow. And the whole point is just like, don't get stuck. You know what I mean?
Well, the other thing we're all not competing, but dealing with this year is the soft market is gotten so soft that it appears that most agencies are going to lose 8 to 10% or more in revenue just from the soft market, from the homeowner. You know,
100%.
Whether it's commercial property, which that could be even higher than that in terms of percentage, but it looks like our agency is going to lose about 8 to 10% of revenue this year because of just a soft market, you know?
Well,
so how do you make up for that? Well, you get new sales. It's the only way you can make up for it.
You get new sales, and then you sell other products to your other customers.
Right. Cross-sell, upsell. You
do. But, you know, something else I've been, like, floating around in my noggin, and I had to look this up because I've taken a bunch of notes. This came to me in the shower, okay? When I'm not thinking about you in the shower, I think about I like breaking business down in a simple format, okay? So when you guys are listening to this, and I know we got to close in just a second, every business's problem or every business constraint comes down to an acronym that I created, okay? And there's no more popular word right now on the internet than slop. People are saying AI slop. Rand, I know you've seen that. I call this slops, SLOPS. Every problem comes down to one of these things. Sales, you're not getting enough sales. Leads, you're not getting enough leads. So sales would be your sales process, your closing process. Leads would be you're not selling because you're not getting enough leads. Output / deliverables, the service side. Okay. The product, you don't have the right carriers. or the staff, you don't have the right people.
Right.
If your business is struggling, it's one of those 5 areas.
Or multiples of those.
Or multiple.
Yeah.
But what I tell the way that I run my business is like we've got more problems right now than sales process, right? But the way I run my business is what's the one thing I can focus on right now that's going to make the biggest impact, and then let's go to the other thing.
Mm-hmm.
You know what I mean?
Mm-hmm.
There's dumpster fires and there's kitchen fires.
Right.
A dumpster fire, you can let it burn. It's not
Yeah.
going to burn your house down. A
Right.
kitchen fire is going to burn your house down.
Right.
Right. And so that's tends to be the things that I work on. It's like, okay, what are we the most efficient in that we can make the biggest impact right now? So anyway, I feel like I've talked the whole time.
I think you're headed in the right direction, no question. I mean, there's not a lot of agencies out there, I don't believe, that are at 9 o'clock in the morning got 4 or 5 salespeople in here doing, role play. That to me is an agency that's headed in the right direction and understands that if we can just get, and this is something I've been harping on now for a month, if we can just get 1% better every single day in something.
Yep.
Especially if it's the something we're the weakest in.
Yep.
Buddy, we're going to be ahead of the game by the end of it, by the end of the year. And my agency, we've had to go backwards to go forwards, hiring some new people, making some changes, putting some people in different seats, hiring new account management. But that's just part of it, baby. If it was easy, everybody would be doing it.
And here's the thing. It's never perfect. There's always going to be a problem.
100%.
I had one of my managers in my office last week, and she said, man, everybody's doing a great job, except for this one person. And I said, how many kids do you have? She said, 4. I said, do all of them, like, do you ever have a time where there's not one disappointing you? No. Like, and that's not to say, like, people are bad, but, like there's always going to be something.
Sure.
There's always going to be a problem. There's always got to be, and I think what the people listening to this podcast and me and you have to do is decide, okay, like, is this a right now problem or is this something I can solve slowly over time?
Mm-hmm.
I have this tendency to, I work best under pressure. I work best under duress. Like that sales meeting you walked in on this morning was more efficient because I had to do this podcast at 10 o'clock.
Right.
You know what I mean?
So it had to be,
and so,
tighter, faster.
So I never, I told Natasha this past December, we had some big project we were working on. I'm like, man, I just want one Christmas where I'm not have something, because the last 2 Christmases we've had acquisitions going on, and then this year it was something else. I just want one holiday season where I don't. And she's like, but that's when you're your best. And I was like, I know, I kind of do this on purpose. You know what I mean? Like, I'm having a baby in 3 weeks,
right?
And we've got some like major changes going on here.
Oh yeah.
But I work best when I have a deadline and I have to get this stuff done by this time.
Mm-hmm.
Like usually on Fridays I leave at 2:00, and excuse me, every other Friday I'll leave at 2:00 because I got to go get my daughter.
Yeah,
I get more done 9 to 2,
right,
than if I had a full day because I've got this hard stop. I've got to get this done.
Are you a guy that before you leave at night or in the afternoon makes up a list of action items for the next day, or do you do that the next morning, or do you do that at all?
I have my AI thing.
Yeah.
That sends me the stuff I really need to do, but no, not really. I'm just so calendar oriented. Everything's on the calendar. I probably should do that. In fact, my wife's been telling me I should do that. She does that.
Mm-hmm.
Hey, I got to get these 5 things done first. I usually just get to the office and whatever the hardest thing I need to get done, the thing I'm looking forward to the least, to do that first.
Clint does that. He has it's like a legal pad notebook, and it's got every day the 15 things he needs to get done that day kind of thing, Right. I'm more of a calendar guy where I just put stuff on the calendar.
Yeah.
But I need to probably do a better job of that as well.
We all can improve in some kind of way.
Absolutely. Guys,
right.
I'm going to shut this thing down. You are listening to the Insurance Guys podcast. Hope you guys enjoyed that short podcast with Bradley and I, just chopping it up a little bit, talking about our agencies. As I end every podcast, rewards come from action, not discussion. Get your ass out from behind that desk today. Stop doing TPS reports. Stop running, your commissions off by $1.50 and go out and build relationships. Make money for your family, for your wife, for your husband, for your kids' college fund, and for your parents and in-laws out there that are struggling like mine. Go make money for them. Write good business for the agencies that you represent, and write good business for the carriers that you represent. Bradley Flowers, I love you.
Thank you, buddy.
Guys, you were listening to the Insurance Guys podcast, and we love each one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care.